When you think about new startups, right, and companies starting up in this area with sustainability as a goal, whether it's sustainability, sustainable climate, or leadership, or organizations, or whether you're established as a B Corp, in terms of going to get investments, then, right, an investor will come to you and they'll go, okay, what have you got? Let me look under the hood. Let me look at your technology. Like, what am I investing in? What's your outcome? So how do you approach those conversations?
That is a great question, Joe.
I don't have the answers.
So we invited her for a reason, you know.
as a company with an idea, and when we started Cred in 2015, like the original idea was to help people navigate like peaks and troughs of life, and then we went wide and we went, are we a leadership development company? Are we helping embed leadership behaviors? Are we a performance improvement platform or ecosystem, to build on your words there earlier, Joanne? And of course, your model is, how do we scale this? Because that's going to be defined as success. But then, and this is probably going back to the question Jeff asked, when I went really back to the DNA of our business and went, why do we exist? Okay, what's our reason for being? And what's the difference we want to create in the world? When I reframed it that way, it was around, we led with impact. Here's the difference we want to make. Okay. And then I was like, well, that's going to take some time. So we're playing the long game in terms of change and behavior, and aligning with the UN global goals gives us that permission because it's a 10-year project and beyond. And then I've taken the pressure off myself to try and raise money or do things quickly. And to your point, Joanne, if I went out, I go to all these pitch conversations and like it's 15 fintechs and run on the social enterprise over here, you know? So trying to...
And they're going, I'm going into this $1 trillion market and I'm going to capture 25% of it. And then Cred comes along and go, we'd like to be nice and we'd like to make an impact and we'd like to help people live a better life. And the investor goes, oh, who am I going to give my money to? Right? And that really, you know, is at the heart of when we're creating new enterprises and we're sending them forward to be for investments. How do we give it wind beneath its wings when it's not solely a profitable enterprise? Still profitable, but just not solely profitable.
Yeah. And I think that's one of the things that the misconception is that, you know, you're a not-for-profit, but we're essentially a social enterprise. So we're not saying profit is a bad word, but we exist for profit, people, purpose, and planet. And another great saying I heard recently was that a social enterprise is where masters of the universe meet flower power. It's in the middle there, you know. so we're like, but and going back to, I kind of as Cred, we define what's our view of success look like. You know, when what's the impact we want to create? What's the legacy we want to leave? Want to leave the world in a better place? And that gives us permission to go a bit slower. And if the right type of investors come in the right time, who believe in our mission and our vision, so be it.
That doesn't sound very good. Like, you know, Facebook is move fast and break things, you know, that's who we want to invest in.
Yeah, well,
I love the fact you've actually raised this, Joanne, because as we've kind of been having the conversation, there have been a couple moments where I want to put my devil's advocate hat on and, well, maybe more my Milton Friedman hat and say, but wait a minute, isn't the objective of a corporation to deliver a return on investment for its shareholders? And you've touched on something I think is a really interesting notion here, Joanne. Like, I wrote a little article recently kind of about when can startups start to become more of like a learning organization? But there is this weird sort of paradigm there that like we've kind of adopted this view of success and what being a cool startup is. You get big really fast, you grab a whole bunch of market share, you have a big exit, and kind of what happens after that is like whatever. And it's very much driven by the dynamic and that structure of venture capitalism. And, you know, when I was talking to somebody else earlier today that was like, you got to be really careful who you get your money from, because essentially they're not part of the enterprise other than the capital that they've put into it. All the people who are inside of it, who are giving their blood, sweat, tears, and energy towards whatever it is, They may be there for different reasons, but you kind of have someone on the outside that's almost like pulling the marionette strings in some situations. I suppose I'm curious, like, Ron, has that proven just to be a massive struggle for you and for any of the other folks on the panel? Do you see this challenge manifest itself in like different ways?
Yeah. So on a personal level, it has been difficult. I'll be very honest with you. It's not an easy road to choose. And we bootstrapped our company. So, we coach and consult and deliver programs to fund development, but because we believe in our mission and vision. And would it be easier if I went out and raised a lot of venture capital and I had a paycheck that came in every week and made things easier? Yeah, on a personal level. But ultimately, I believe, and we believe in our vision and mission and our purpose for why we exist. And if the right types of partners emerge, and they are, that's what we're seeing. So when we led with purpose in the last couple of years, here's why we exist, here's the difference we're trying to create. It's brought different conversations. And then someone says, oh, you must speak to this person in this part of the world, and then the doors open. So as opposed to, I'm Ronan, I built an app, it does these things, it's got these features and delivers these benefits, and we're going to have 1 million downloads next month. So I think it's, but I think I've kind of given us permission to jump off the treadmill and choose a different route.
And, it's interesting, as a large corporate who's trying to turn their way towards sustainability, what do? They buy their impact, right? So they're like, okay, well, I will, I'll put in the recycling bins, and I'll get recycled coffee cups, and I'll do all that kind of, observable stuff. But other than that, then I'll go and buy a share in something that's, or they'll invest in, an impact investment, because it offsets rather than corrects. So they're still like on that train where they're, chasing the profit and then balancing the good and evil by, buying back some carbon credits or whatever. And, I think when we start in putting a value on the unintended consequences of technology, I think then we might start to get slightly closer to the truth in terms of, if you were to say value Facebook, and I don't want to call them out, I have a lot of great friends who work in Facebook, or, any of those kind of platforms, or even Netflix that we get hooked on, and start putting a value on the unintended consequences in society for those kind of companies, then we get closer to a proper balance. But I don't know if that'll ever happen.
I think there are, if you look at investors, I think there are funds that are now in place that place on socially responsible businesses. I believe, what is it? Chase, or one of the big banks, was putting together $3 billion for women and minority opportunities. And I'm sure the Gates have a bunch of stuff that's out there. I think Microsoft, they have these offshoot funds that if you want to shoot for, then you can. I know one of my former colleagues was into this sustainable farming fund. So he bought a bunch of land and was able to get funded. So for what it's worth, they are out there. I think the only advice that I provide from a financial side of it is get to cash flow break even so you don't need them. The minute you need money, that's when the FANGs take shape and says, oh, you no longer own the company. I do, and I'll do whatever I need with it. So for what it's worth, there are, up to a couple of $1 million of funding that should be available if you have a good concept and you have the right pitch. But, when you're looking at, like the Ubers of the world, they want a second round funding of $500 million. You're not going to get that without saying you're going to give them 40-50% return on their money. So.
Yeah.
I think that's where we're all doing such a great job in leadership development and raising awareness, because everybody's trying to transition from the old paradigm to the new, from the capitalist competitive type paradigm to ecocentric community, sustainability type paradigm. So I think even when the big energy companies are investing in, as you say, you know, Joanne, the things that are going to have some impact, regardless of what they're currently doing, they're still course correcting to the best of their current capacity. And there are investment companies, so that's simply investment companies. So they're segueing into investing in conscious businesses because their returns are just as good. So everybody's sort of making their own transition in their own best way they can. And I think what we can all do, because we appreciate the need and we're putting all our energies into this evolution, the more we can enable each person to realize how powerful they are, how much more powerful they are than they think they are. That we can really start to turn the boat around, you know, because the whole world is a bit of an ocean liner, but the power rests on all of us. So I think, you know, that sort of appreciation can really ignite lots of evolution. And with people the likes of us sort of moving things along, it's going to move.
Mm-hmm. Yeah, I would very much agree with that, Antoinette. And, you know, I've been following Paul Pullman and a lot of what he says over the last 10 to 12 years, and I think it's just such a great example. I mean, he really took a massive global corporate and said, you know what, we can actually still do okay and be a better business in how we do our business, how we make our money, things we don't do anymore. And he showed us. And I think you see now how many other leaders are kind of trying to be like him and trying to follow him, and others as well, and not just picking an individual. But, you know, I suppose the point that you're making, Antoinette, I really like. And if I could come back to something you said earlier, because I made a quick note on it, if that's okay, Jeff and Mindy, just to say.
Absolutely, yeah. Take us wherever we want to go, man.
Which is, I really, really like that idea of, it is the box that's changing here, the frame that's changing. You know, it's not going back to the same frame as before, because that would just be, let's go back and make our 10 and our 20 and our 30% in the same way as before. That's not the solution. So I think there's a huge, I think one of the biggest pieces of work, Ronan, you touched on it, is how we reframe value. You know, what's a return on investment? What's valuable at the end? So yeah, okay, maybe there'll need to be some euro or some dollars or whatever there, but what else? And I think that's what's interesting in shifting. Even in the US way, I've worked a huge amount with US colleagues over recent years, and even the Business Roundtable in the US. And there's a lot of cynicism around it, but some of the biggest companies, you know, finally did sign up in 2019 to the idea that it's not just about shareholder return. It is about all stakeholders, which includes employees and includes, you know, the communities where you operate. And I think, you know, some of that is definitely greenwashing and social washing at the moment, but it'll change. It'll change. Even the fact of doing that was the first time since the 1970s they'd made such a fundamental shift in what was represented as the purpose of business or what business brings back. But I suppose my last point then would be that, so on the one hand, you're saying it's not just about money, right? That's a really important statement to begin with. But the second is, I think, even what counts. You know, like when I did the course in Cambridge, someone mentioned externality. And I still laugh at it because I'd never heard the term, and it was being used to describe, you know, the air, the water, the birds carrying seeds from one tree or plant to another. And that, I think, is one of the most fundamental struggles, funnily enough, because accountants don't count externalities. And they're really trying to get their heads around that at the moment, because it's all the stuff that we took for granted was sort of free, in a sense, we're now realizing has a really important value. And how do you capture that value on the books so that you're not taking it for granted, you're not just using it up till it's all gone. And of course, it has a social dimension as well. So I think it's going to go right back to the language we use, how we use it, and what we mean when we use words like value or something being external or intrinsic or internal to how we do our business. It's only when we see that beginning to shift that we'll really have that mindset trigger for everybody to change their behaviors.
Yeah, and as an accountant, Dennis, you made me think now that while we're also not accounting for that value, we're not accounting for the cost either, right? Because we deem it to be free, but but it's actually not free. So that might be an interesting place to start.
Yeah, I think it would be. Just very briefly on that. What really brought it home to me was last year I read a very, very large corporate writing about how they were going to internalize externalities. And I thought, if you're struggling with saying that, then there's something more systemic and fundamental wrong. If that's what you end up saying, now it's good. The intention is good, of course, but that means you've got to change the whole framing.
And what is internalizing an externality?
That's exactly what you described as I read it and understood it, which is saying, okay, yeah, you know what? We do need to actually count the birds who we rely on to pollinate the bushes and the trees or whatever they're doing, because if we don't, we may not have a business. And they showed that in one of the photographs they showed us on that course. They showed Chinese farmers pollinating apple trees themselves. Like it was people up ladders pollinating apple trees. And they were making that point that, you know, we can't call that an externality anymore, because it's just not. It's actually that company was growing apples to sell them, to try and make money, right? So they can't do that unless the pollen actually gets there in the first place.
And then if we follow that train of thought, I'm just thinking, so right now we have people that are a resource and we count them as a cost. So let's say we go and we count the bees as resources, right? What are we going to do then? Sweat those assets and make them work 24 hours? and put them on performance reviews?
Sorry, Antoinette.
Yeah, I think we need to switch them to assets. I think, you know, obviously the capitalism world is run by accountancy, it's run by all the numbers. So I remember a long time ago, do we count people or do people count? And I just think, you know, we've got to switch to the asset side and shift out of the capitalism norm altogether and have a totally new paradigm. That's an ecocentric one that relates to well-being, even not success or even happiness, but just simply well-being, where every single person has an opportunity to flourish. And that changes a lot of things. But I think global corporations have such a big role to play because nation states are pretty much mostly disintegrated, and commerce still rules the world, really, apart from smaller countries. So, and then you've all mentioned the likes of Netflix and Amazon and Google and these huge platforms that are worth billions. I mean, and they pay taxes. Somehow or other, they're going to have to be the core of the future because they simply are, you know?
Yeah.
So, yeah, I don't know how it's all going to work out, but we certainly need more synergistic, what I call synergistic leaders, people who embrace the lot and can re-engineer the whole to enable us to see a different way of being.